Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN, NVDA, TSLA NFLX, and CMG on the daily weekly time frame. So PCLN had a bear break after 4 days of trading sideways. The break of the low of those 4 days, 1769, was the initial bearish signal, and we followed through down towards the middle Bollinger Band support. That's the next support area, and it's going to be at about 1748 tomorrow. If that level's lost, we're looking down at 1712, so the bulls really want to form that higher low. Keep an eye on the tech sector. We are seeing correlation between PCLN and the tech sector. We've seen this multiple times throughout the year, but over the past week, it has definitely been fairly clear that that has been the case. Weekly time frame, higher low and higher high, but not convincingly over these exponential resistances. The bulls would be much more comfortable if we were well over those levels and they were beginning to curl up for a potential bullish cross. At this point, we still have to be cautious as bulls. It really depends on what the market is going to do. If SPY continues to consolidate and starts the 2018 year on a down note, then we're going to be looking for PCLN to head back down towards 1700. If we see a bull break and new all-time highs, we're going to look for PCLN to be 1800. So the correlation is very important with the S&P 500. NVDA, beautiful recovery today, confirming the bullish reversal hammer from Friday and closing up near the high of the day. Break of 198.07 will lead to higher highs and have us looking at 200 psychological, and the strong close has the bulls' momentum in their favor as cryptocurrency, blockchain, and semiconductor names all had some pretty good days as they recovered from the dump on Friday. NVDA on the weekly time frame still holding the middle Bollinger Band support. Goal for the bulls this week is to close over 200 and over these exponential resistances to keep the middle Bollinger Band support and to make our way back towards the all-time high. Tesla dumping continues. The low of the day close on Friday showed momentum. It followed through today, and we have another close at the low of the day showing momentum into tomorrow. If we break the low of today tomorrow down at 316.58, we're looking at the next support down at 311.05, but the hourly RSI is already oversold. So if we see a quick flush down tomorrow, we are looking for an hourly oversold bounce to begin to develop, and that will be a signal to enter Tesla for a short-term oversold bounce. That's going to be one of our plays that we're watching tomorrow. Weekly time frame, I'm anticipating the bulls to defend the 50-week moving average support by the end of this week, 317.32. So even if we do see some further downside tomorrow, still plenty of time for the bulls to potentially recover. Netflix on the daily time frame, still holding the 100-day moving average support. Day after day, that level is tested and continues to hold, but the bulls aren't doing anything in terms of showing strength. Have to break 190.95, a double top from last week, and then we're looking at 192.64. If we close under the 100-day moving average support, we are looking at a clear bear break and the potential loss of this middle Bollinger Band for the first time in months, and a shift from bullish to bearish conditions on the weekly time frame. If we lose this middle Bollinger Band, that will definitely be the start of a more significant loss of support and shift in momentum. So we've been highlighting how Netflix has been a clear laggard to the other tech names, has not been participating out of the big five that we follow. It is the most bearish just because it has so much resistance to that all-time high, where we have names like Google and Amazon right at their all-time highs. CMG, bulls tried to bounce and follow through. We were scouting a bearish entry around the $300 psychological level. We didn't get to 300. We rejected from daily exponential resistance, and we're seeing weakness, low volume. It's a potential bear flag at this point, and if we can't get over the daily exponential resistances, we will look for the bear flag to follow through. Support is 290.33 with a gap to fill at 286.06, and at this point, could see a little bit more upside. It all depends on whether or not the bulls are able to break 297.49, the high of today, tomorrow. If we are not, we are definitely seeing the bears maintain control and looking for another leg to the downside. I appreciate you watching. Hope you had a good holiday break, and we'll see you tomorrow.